Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey, welcome everyone. Good evening. We're going to get started in just a couple minutes. It's the swing trading class, and Trump is set to speak any moment right now. So if you guys are trading, just keep that in mind. Could be a little bit of volatility going into the futures market, and just please monitor your risk.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, thanks for joining. Welcome to Stocks Number Trading. My name is Ron, my partner is Dave. It is just after 6:30 p.m. Eastern. Today is Tuesday, December the 9th. So thanks everyone for joining. I appreciate everyone joining at this time of the day. I know over here in North America, it's our evening. And for some of you guys in Europe and around the world, it's pretty early in the morning for you guys. So thanks again for joining. This is going to be a continuation off of our yesterday's session where we introduced gold. We introduced swing trading. I haven't changed anything, so the levels are still where they are. We're going to monitor the price. We're going to see how the 4-hour candles have been moving. We're going to make some analysis on these candles. If it was any other day, I would maybe be looking to maybe attempt to take a trade, but it's tomorrow's FOMC at 2 p.m. Eastern. So maybe we just kind of keep monitoring and seeing how things are unfolding leading into the FOMC. And sometimes just learning is also good, so we can maybe see what's going on. So then it's not gonna be our first and last FOMC that we're gonna be trading into. So maybe we see how the markets are engineering their move going into the FOMC, and we can see after the fact how it reacts after the news is released. And then maybe we can look for a setup right after when we come in on a Wednesday evening, and maybe that could be a swing for the Thursday, Friday to end the week, or maybe go into the weekend as well after the news is released. And also what I want to do is a nice top-down analysis also on oil, because it is getting at some very historic levels where could be maybe a nice swing trade on buy side. But again, we got to break it down, and I'd like to do a full complete top-down analysis on oil. So then it gives us two securities that we can be watching when we're on our swing trading sessions. We'll be watching gold and oil, and then on our next session we can introduce another security. A lot of you guys have been asking about Bitcoin. I don't mind doing Bitcoin as well, or anything for the matter. Okay, when it comes to swing trading, it's more your charting, your analysis, your zones, your points of interest, points of control, that and setting up your alerts. Okay, so I'd like to do that on today's session too. I'm not going to hold you guys up too long. We're going to go for about 90 minutes, 2 hours maximum, till about 8:30, and then I'll get you guys going on with your day. And then tomorrow we got to be rested up. Tomorrow's a big day, so Dave will be taking over New York at 8 a.m. and then I will be coming in for the FOMC session. We're going to start at noon, 12 p.m. Eastern, and we're going to go for 3 hours until 3 p.m. So we'll get ourselves situated. We'll do some analysis on how markets are moving leading into FOMC, and then we'll watch gold, NASDAQ, and US 30 all have the analysis done, and that's what we'll be watching for FOMC tomorrow and Mr. Powell, okay? And guys, I hope you guys are all having a great day. Our earlier session, we had some fun. We took a sell on gold. It was real nice, proper setup. It It was a double top around noon, and we saw the liquidity grab, and we sold the leg going down. Encountered a little bit of drawdown, but it ended up moving in our favor. And I secured 80% at 50 pips, and then I left 20% running, and I secured the remaining 75 pips at the when it hit a higher time frame green box. Okay, and that was a good session. It was about 90 minutes this afternoon. We got in, we did our analysis, we got in a trade, and it worked out good for us. And also, if you didn't take the trade, a good learning opportunity. Okay, and so. This is the chart how we left off yesterday, and I'm just going to continue off of it. But first, before we get to the charts, I just want to go over the news. So right now, you guys could probably see Donald Trump is set to speak. He's in Pennsylvania. He's going to be talking about the economy. He just stated that his economy is that the reporter asked him, and he said A plus. And then he said A plus 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 plus. Like that's where the state of the economy is in his opinion. I beg to differ because cost of living is going up. There's a lot of job losses. There's a lot of unemployment claims. There's a lot of the dollar is dropping. Everything. Just I don't know what he says is an A plus 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 economy. Maybe it is. Maybe I don't live in the U.S., so maybe I don't know these things. But we had the labor turnover come out today, the JOLTS. The number of job openings was unchanged at 7.7 million in October. The U.S. Bureau of Labor Statistics reported today over the month, both hires and total separations were little changed at the 5.1 million. So there was the JOLTS job openings that came out earlier this morning right over here. So that was some high impact news, and we got President Trump speaking. He's probably speaking right now. I don't have it on the channel where he's on right now. But if you're going to be trading, just remember, be careful, because anytime this guy talks, especially when he's talking about economy, things can start moving and it could get volatile. Okay. And tomorrow, just to reiterate, tomorrow's a big day, guys. We got a lot of news unfolding. We have our red folder at 8:30. So with Dave, when you guys are trading here, be careful. Right after COMEX, right over here, you have your employment cost index quarter over quarter coming out in the US. Canada, we also have an overnight bank rate. We have our Bank of Canada statement as well over here. It looks like they're relatively unchanged on the forecast. So it looks like Canada's job market is holding steady and doing good. It's a little different than US right now. So that's why maybe Bank of Canada is pausing on the interest rates over here. But markets don't really follow what Canada's doing. We're following what is US market. That's the big market. So we follow the US. I live in Canada too, and I follow the US markets. Then at 10:30, we have the Bank of Canada press conference after. It's kind of like when Powell takes the stage in the FOMC. Similar. Every nation goes through this as well. And tomorrow, crude oil inventories. That's good. So if we do a swing trading chart tonight, we want to start following our weekly crude oil inventories. These are released every single Wednesday morning at 10:30 a.m. Eastern. So any of the crude traders out there, make sure you are watching your crude oil inventories, because this directly impacts the supply and demand. And then 2 p.m., you can see we've got big red folders. Federal funds rate, it's set right now at 4%. The forecasts of the analysts are at 90% agreement that there's going to be a decrease of 0.25 quarter basis points, and it will take it down the federal funds rate to 3.75. Okay. And that's what's in the forecast. So we'll see the actual result. Again, if it comes out exactly like it is, maybe the market is already kind of baking this in right now, consolidating, expecting this cut. Will the markets react after the fact, the next day, next week? Are they going to be relatively maybe not changed by this? But if something comes in different, like for example, if they don't decrease, if it comes in as a pause, that could shock the markets. Or however, if there's an increase in interest rates, that's very low probability. That's like less than 3% chance that they increase. But I've seen it once where 98% of analysts were calling for a cut and it actually increased. And oh my God, if you saw the size of a 1 minute candle on that news, holy shit, I can imagine how many accounts were blown up that day. Sometimes, it's like you never know what they're going to do. But this is more than likely a decrease. I think even Powell has submitted and he's going to go into a cut. Okay. Things might remain paused going into the new year in 2026, but we also have some news that there could be a new Fed chair, and Trump can appoint Hassett and Hassett can take over. Hassett is Trump's puppet. So Trump wants to get the interest rates down to 1%. He wants a 3 to 4% drop. If that's if that happens, great. The stock markets will love it. There'll be a lot of liquidity coming into markets. We'll see all-time highs in risk assets like crypto. Crypto will continue to drive up. It's a great time to pull back. We could see other assets, stock market could go back to all-time highs and continue to skyrocket. But you and I, as consumers, as retailers, when we go to the stores, unfortunately, it's going to destroy us. It's going to destroy our wallet. When we're going to Walmart, when we're going buying things, when we're shopping, when we're going to the grocery stores, if you keep printing money, it's very simple economics. You don't need to be a rocket scientist to understand. The more money you print, the more money you put in the markets, is just going to cause things to go up that we normally staples that we need to survive. So paying your electricity bill is going to go up. Paying your rent might go up. Paying for housing might go up. Grocery shopping will go up. Your gas will go up. Everything. You're just every day. That's the way it works, guys. So there is the good and the bad that comes with it. But if you're trading the markets, it's great for liquidity. Okay, and then we have the FOMC economic projections. This is not on every single FOMC. There's just a few of these that report with the economic projections. So that will be released too. And then we have the FOMC statement. That's for the first 30 minutes. And then the next 30 minutes is, again, it gets real volatile here. This is when now the press conference begins, and this is where Powell takes the podium. Sometimes when he hiccups, he burps, or he farts, the markets move. So before he even, when he says just good afternoon, that's it. The markets take off. So you got to be ready for this. So this is at 2:30. Then he will justify whatever is the actual, if they do decide to cut, pause, hike, he'll justify it, he'll talk about it, then he'll start answering questions with the audience, okay? And that's tomorrow. Then we'll come in again post for Tokyo for our final swing trading session for this week, okay? And that's what we got going on. That's in the news. Right over here, just some news. Bitcoin jumps to 94K today, but hawkish Fed cut threatens crypto rally. So we'll see what happens with this crypto rally tomorrow. Will crypto... I'm looking if it can trade back in 96 to 100,000 and consolidate in there and see if we have one more push up to trade into the 110s, 120s, all-time highs, or is it going to just trade around here, 90 to 100,000, consolidate, and one more pullback down to the 80s, 75, 70,000 to see if the real buyers, big buyers are in there to take it back up to the all-time high and really smash the all-time high and take it out of there. So I follow crypto too, guys. I don't mind doing a nice crypto swing trading charts on the higher time frames, talking about the history of Bitcoin. I've been trading Bitcoin for a long time since it started in 2009 and 10. I've been trading. I've been through everything you can imagine with Bitcoin. Holy shit. Do I have some stories to tell? Bitcoin was a wild ride, and it still is, guys. It's a baby in the financial industry right now. And that's in the news right now. Discord, we sent out a few signals over here. There were some on NASDAQ running nice moves in there. And guys, we have a free Telegram channel. It's pinned at the top of everybody for YouTube. Thanks everyone for joining. There's 100 of you viewers. If you guys can kindly leave us a like and subscribe to the channel, we do appreciate it. You get all of our live links to all of our live sessions. Again, some recaps of you guys in the comments. Shout outs to all of you guys. Thank you guys. We appreciate you guys. And here's BTC today, pumped up on the expectation on a cut today, tomorrow. Dave with the New York snipers in the morning sessions. That's the private Zoom, pipping and dipping in there. And our before and afters of our trade signals and trade ideas we send out to the group, and we trade these as well. So we're not just a group that just sends out just a signal and that's it. We actually provide analysis, trade management, letting you know sometimes they go in drawdown, how to handle drawdown. Sometimes they have to come back and back test and retest, and some are impulse moves, some are confirmed moves, but we like to follow up with a good trade management. No signals are 100%. It's impossible. Like it's literally impossible. It's just like trading to say that you're 100% trader all the time. You're full of shit. Okay. So trade, but we do spot good probable setups, and we have a good track record with those, and they're there to help you with your own trading as Confluence. But Some traders like signals, some don't. It's up to you. We provide it, okay? And on our website, guys, stocksnipertrading.com, we have lots of education. I'll go into the education on this call later on. There's free blogs available for everybody. I'm not sure if you guys were on our call yesterday, but I went over this blog on swing trading. This is a good blog to get you in the mindset of what we're doing on these calls. We're not scalping the markets. We're not intraday trading. We're looking for bigger moves and good high quality setups on higher time frames, okay? And that's a good blog for you guys over there, okay? And finally, guys, thank you guys for everyone that's hit the subscribe button. You guys are awesome. Thank you guys. We appreciate you guys. Our goal is now to 91,000 and on our way to 100,000 in the near future. But okay, so thanks everyone for joining. Welcome everyone on Zoom. Thank you guys. Sergio, welcome. Thank you for joining. Justin, thank you. I appreciate you for joining as well. I had a good one-on-one, good call with Justin today. So we're going to be working on a few things. And congrats to everyone working hard at their trading. Samuel, welcome. Thank you for joining. Tyler, thank you for joining, bro. XRP has been a wild ride. I wasn't too involved in XRP. I've been Bitcoin like from day one was Bitcoin. I dabbled with a little bit of Ethereum and things like that, but I didn't really get involved in all of the other alternative coins and things like that. But yeah, it's had a wild roller coaster ride. But we all have stories, right? Everyone on this call all has stories. I can imagine one day we'll come on here and we'll just have some drinks, we'll have some smokes, and we'll just talk stories about wild rides we have in trading. And I guarantee you everyone has a story, okay? And also, good evening, Kyle. Thank you very much for joining. Such a good afternoon session. I posted in Commodities channel that I took my first proper trade on my own with everything I have learned from us here. Amazing. Congratulations. That's what it's all about. Post those, Kyle. I'd like to see them. Guys, anything you need feedback on, whether it's a winning trade, a losing trade, a stop out. If you have questions about anything, post your charts. I encourage you guys, post your charts in the Discord, and one of us will give feedback, whether it's me, whether it's Dave, whether it's one of our admins, one of its moderators, or it's just anyone in general that's a sniper here and gives their feedback and analysis. It's great. That's how we work as a team together in the market. So thank you. And everyone on YouTube, thank you guys as well for joining. We appreciate all of you guys. Again, Sergio, Justin, thank you guys. You guys are the top, and during our Zoom, guys, you don't know how much I appreciate you guys. Thank you. You guys don't have to do that, but I appreciate it. Thank you. Obi, welcome. Thank you for joining. Q Dejar, welcome. Thank you. Who's hitting the join around here? Come on. Yusuf, thank you for joining. Don't worry. If it's me, if I'm hitting it, I'm always passing it. So you don't have to worry with me. I got enough weed to feed all of us here. we got enough. We're good over here. It's legalized in Canada. We're good. If you're ever here, you don't have to ask. You just smoke. That's the way it is here. Hospitality. My house is your house. You enjoy. The bull, welcome. Oh, you got a little freestyle for us. I'm gonna read it, okay? And I don't have a rapper's voice, but I like this. Yo, puff puff pass, just to ease the mind. Got in a trade at the nick of time and profit of a dime. If I shine, you shine, just a matter of time. Ooh, that's legit. That's good. That's proper. I like that. Shout outs to you. That's good. That's bars. Those are real bars right there. Now we're gonna look at another type of bars. We're gonna look at these bars, but those right there, those are proper bars. The man is spitting over there. Respect. Okay, so let's get into this now. So you remember where we left off yesterday on this analysis, right? Yesterday was Monday. We were watching kind of over here. And guys, just to, I'm on a different chart. I'm on Oanda over here. Normally I use FXCM, but I'm on Oanda, and they have, you got to check with your broker or different brokers. Some of them, their 4-hour candles open at different times. It could be a 1-hour difference. Because this Oanda broker, they open their daily at a different time. So that will affect the 4-hour candles. But it should be the same price action on all your charts, okay? So Today, we can see what happened going into Monday. Here was the open. You know, we were trading inside here during our session, and then things really opened up over here. It came down very bearish and broke down. So there was good opportunity where it was pushing down. But right over here, you see how when we were coming down to this purple line right here, this is our December monthly low. So, you know, it didn't break down, fill that entire wick and drop, or did we get any bearish volume closing below here? So it came down. It was shooting down. This is 1 a.m. Now this is like 1 a.m., 2 a.m. Eastern, 3 a.m., 4 a.m. So this is representing like pre-London, pre-Europe over here. So it was initially coming down bearish, and then look at it, just kind of rebounded down there. So it was kind of like an impulse break. And if you follow the volume, which we're doing now, look at what it did. It closed, it pushed all the way up there, and it closed above this consolidated range. Okay, so what's the first thing we should be doing with this big bullish candle? Is there anything that we should be doing about this? Okay, because now we know it didn't close below here. And then if you were following this and it came all the way up and it closed above this consolidated zone, cut it. Easy. First thing, cut it, guys. Yeah, you cut it. Perfect. You guys got it. Cut it. Why do we cut it, and why do we cut this one? That's a good question. Someone might say, well, Ron, why cut this one? Why not cut that one right there, the one after it? Because it's very important. Like when you look at it, look at what it did. It completely came down and swept liquidity. Okay, so some of you guys are learning. Sweeping, like taking out a low or taking out a high, is another word for taking out liquidity. You're hitting all of those pending orders down there. And then look at what happened. It came up bullish, bullish, bullish. And then when it was trading into 50% of this bearish candle, maybe there was a wick to push it down, but it kept filling and filling and filling and filling, and it engulfed. That's another good word, guys. Engulfing, swallowing. Like it completely engulfed all of those previous sellers and closed above this consolidated zone. So that's an important candle. So when you see something like that, first thing you should be doing is making some sort of analysis on that volume. How do I do it? This is how I do it. And you guys probably know how we do this because we do it on the lower time frames on a daily basis with you guys. So like with this candle, it's a pretty significant candle. It engulfed this entire zone here, and the sellers pushed it down, but they didn't do anything convincingly. So again, if you're a swing trader and you sold down there on impulse, you were in the money just a little bit, and then it came right back up, and maybe you're holding in drawdown, or maybe you got stopped out already, but that body didn't close. Okay, so you got to understand, if you're a 4-hour trader, you may have to wait an entire 4-hour bar to close. Like this one right now that just opened, there's 2 more hours to go on it, right? If I'm going to trade after this, I have to wait for this physical bar to close so I can get more evidence. Where's the volume doing? What is it doing? Do I have any points of control, any interest points, anything to basically analyze? Or am I just trading on just guessing what's going on? Okay, that's not a method or strategy of trading. So first thing I do is acknowledge what type of candle it is. Number one, is it an important candle? Is it worth my time analyzing this? That's what you should be asking. Is it a candle worthwhile analyzing? In what I'm breaking down, I know maybe after the fact it looks easy, but this is why I'm trying to drill this into your head prior to the bar closing. Do your analysis. Get it done. This is how you can be ahead of the time. So when it pulls back, it could be pulling back right into a high probable area. Now, first thing I do is cut it. I don't give a shit what time frame the candle is. If it's a 1-minute structural candle, I'm cutting that and I'm analyzing it. If it was a 5-minute candle, a 30-minute candle, an hour, a 4-hour, a daily, a weekly, a monthly, I don't care. If this was like a monthly candle that did this same thing, and I'm an investor, I would be doing the same shit and waiting 2 months for it to pull back in here and maybe possibly looking to take a buy out of there, right? So it doesn't matter. There's no excuse. The only thing is you pick your time frame of trading. The price action is the same shit across the board. Okay, so I've figured out now Where's the 50% of this? Okay, so it's right there. Utilizing a white line, but remember when I'm doing my trading candles, I like to use a red line. Okay, that's what I do when I'm scalping. So that's how I'm going to keep it like that. So we know that the red line is the 4-hour analysis. Okay, so that's 50%. And now I can also find the point of control of that big bullish candle. How? You guys know how. If you don't know how, very simple. It's the top of your Fibonacci and the one above and below the 0.5. It's either the 618, 382. You might have them reversed and then it's just 382 and 618 down there. But what we're trying to do is just figure out a little bit above and a little bit below. So we get a zone and not just a point of interest. We're getting a zone, okay? And then I make it green to represent the buyers on that particular candle, that they showed authority. They showed that they're aggressive. They showed that they're in charge by engulfing and taking out the low and making a new high and closing above this entire level, okay? So that shows a lot of strength. Now we're analyzing, okay? So now your job is to stretch it into the future. Then I can see the preceding candle, okay? So now I can see where it closed, right? If I'm still making some analysis, I can see where now that 4-hour candle closed. It closed right there, right? That's how high it went. There's the closing price. Next bar that opened right here, and it was bullish. So this is a new bar from 5 till 9 a.m. So this one's going to represent pre-New York. It's going to represent COMEX. It's going to represent North American news at 8:30, and it's going to have a little volatility. And it came up. It was originally bullish. It was originally blue, but you see it didn't fill entire backfilling. Remember, this candle's job, if it's advancing off of this and it opens bullish, it is to continue to fill this wick and advance for a new higher high. So when it was coming up, you see it produced a lower high, and sellers are there pushing it down. They came back to the opening price and pushed it all the way down, but you see it's got a low wick right there. Did we transact into the green zone in the point of control? No. So it had a shallow pullback. The buyers were there and pushed it right back up, and it closed right there at the end of 4 hours, and it closed as a bearish spin top candle. These are normally 50-50 coin flip candles, right? But there's a little bit of black volume, so we can give them a benefit of the doubt, 5 or 10%, 60-40 maximum or 55-45, that sellers were in control of that bar, right? They're not in control of the entire trend. This bullish candle is still holding strong. It has not been tapped into. So look at now, we closed, and then this bar now it's 9 a.m. So this is going to represent Wall Street, 10 a.m. Remember we had JOLTS, job openings, labor turnover, high impact US red folder. So you can see the significance and the range when there's news. Okay. So this candle opened and it was bearish. So it was continuing off of this bearish candle and it came down. It was black. And look at what it transacted right into. Did anybody, like, this is where I ask hypothetically after the fact, did anybody map this out? Did anybody have a pending order in there? Did anyone test out buying this wick or no? If you didn't, no worries. That's why we're going to continue to learn together and get you guys looking at the specific stuff. So first thing, I can see that if you guys are asking me what is COMEX, okay, it's not Colmex, it's COMEX, COMEX, okay? So these are very basic questions that you're gonna have to learn, guys, believe me, because I want to take your education a little bit more advanced than just learning what is COMEX or what time does it open. These are basic things, guys, you're gonna have to learn. We'll continue learning, but COMEX is the commodities exchange. It opens up 8:20 a.m. Eastern, Monday to Friday, and closes at 1:30 p.m. Eastern every day, Monday to Friday. That is an exchange dedicated to gold, silver, copper, commodities. It's just like Wall Street is dedicated to stock securities and corporations and companies, that there is an exchange specifically for gold, just like NYMEX. New York Mercantile Exchange is a dedicated exchange for oil and things like that. So guys, we got to learn these things, okay? But good question. Hopefully everyone knows now, okay? And you got to be careful at that time because that's when that exchange is opening up and there's a lot of volume at that time. There's a lot of volatility, okay? And if you're trading going into that or not knowing it, then you could cause yourself to do some damage, especially if you're over leveraged in trading. You know, you could set yourself up for a disaster. But that's why it's good to know when you're trading what to expect every single day, right? Once you get in the habit of doing this, you're going to know every single day at 8:20 is COMEX. If I'm trading gold, I have to be aware of that. It's just going to come as second nature. But I understand maybe some of you guys have never heard of it. I didn't hear about what COMEX was when I started trading. So I asked too. I had a silly question in a group and I said, what is COMEX? And one guy said the same thing to me, said, you got to learn this. This is basic stuff, okay? But they weren't mean to me. They just said I had to learn it. So then I said, okay, I got to learn it because these guys are doing more advanced concepts. So I got to catch up with them. So that's what you guys got to do too. You got to put in a little effort and continue to educate and learn yourself, okay? Because we don't want to hold you back, but we know you guys could be beginners. So we're here helping you guys. So that's what COMEX is. That's why I like taking these sessions a little bit slower, and then I can actually explain and educate, because if we're in a fast-paced market in New York, candles are moving, we're on the 5 minutes, I don't have time to answer all of these questions because we're looking at candles and we're trading and we're in live trades. So you got to kind of, you know, this is the time to learn. These evening classes with me are like more night school classes, and we really can start learning. Okay, so you see now let's just back test. We're back testing right now. Like literally, that's what we're doing. We're back testing. So you guys see this candle was bearish, 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 and look at the result. What happened in that point of control? Do you guys have any questions? Do you see how it came right in there? Once it came right in there, what did it do in there? Okay, so do you guys have a question as to what is happening in here? Why is there a wick getting rejected out of here? I know we can see it, but does everyone understand like the logic behind what the market is doing in here? This is when you really take your education to the next level. This is when you're kind of understanding what is going on in here. Point of control, Tyler. Yep, but more so with the pending orders. Okay, you guys have heard of what are pending orders, right? Pending orders is they're sitting in the market everywhere. There's pending orders. They're called limit orders. And what moves the markets is the aggressor. The aggressor comes in and activates all of the pending orders. You guys got that? I know someone might not be understanding it, but pending orders. Have you ever tried placing a limit order in the market? Either a limit buy, a limit sell, and you set it at a level and you wait for the market to come there and activate it. And then you're in the trade automatically, right? Those are called pending orders, limit orders. Or you can trade with execution, market execution. That's you hitting the buy and sell button when you want to, right? You're not, so resting orders, exactly, extraordinary. That's the way, guys, you think of your own names, okay? I'm giving you kind of the technical names, but you think of the name that makes sense to you. Resting orders, that's perfect. I never even thought of that. They're orders that are resting in the market, waiting to get picked up. Amazing analogy. Okay, so what type of orders can we have in this green box? A lot of traders think that they're just green buyers, like they're just buy limits. Like I'll show you like this. Like you see this in here. This is a, let's say for example, this is a pending buy order, right? So it's green. That's why I'm making it green to show, okay? So we could have pending buy orders in here. A lot of traders just think that they're only pending orders in a green zone, but that in fact is incorrect, right? We could have sell orders in here too, because there could be, as the black candle is coming down and taking out that low, this block could have sell orders in here. There could be sellers wanting to get activated and hoping that the market is going to continue selling down. So there's also sell limits in here. Okay, so I'm going to show you with a line making it red. So you understand that we got buy orders, we have sell limits. Does this make sense, guys? Okay, I need you to understand this. If you kind of understand this, then you're going to understand what we're doing on the 5 minutes and on the 1 minute. I'm just slowing it down on the 4 hours for you guys. Okay, I'm not going to continue until everyone understands what I'm doing, because we can't leave anybody behind. Guys, I'm drinking eggnog. How many of you guys drink eggnog? This is a fantastic holiday drink. It's actually spiked with a little bit of rum, and it is, wow, This is the shit right here, Tyler. When was the last time, Tyler, you had a Canadian eggnog with some rum in it? When was the last time? Cheers, everyone. Salud. No, you got to. It's a fantastic holiday drink. It gets your mind flowing. It gets your mind thinking a little bit more. Eggnog with just a little splash of rum. Not too much, just a little splash. Okay? So, sherry, no alcohol, sherry. No, this is non-alcoholic. Sherry, non-alcohol. This is just straight eggnog with a non-alcoholic rum shot. The rum or the eggnog, which one is the splash? It's all good, guys. Okay, so let's get back here. Let's get focused, because sometimes you get Ron unfocused here, and we gotta keep this man focused over here. Okay, so we have orders resting in the market. They can be buy limits, sell limits. So you guys understand why some traders use a depth of market, like a footprint chart. You know, like Bookmap has those bubbles showing how many transactions take place, and then it shows the delta. Delta is a mathematical term. If you kind of add something and subtract something together, you'll get the total, is the delta. So that's why when all of these transactions are taking place, have you guys ever seen a positive delta and a negative delta? Have you guys seen that before? This is when you're taking your trading to the next level and you're learning more about level 2, level 3 analysis. This is kind of like, you don't see this with a traditional candlestick. This is more like a platform that shows you more the hidden transactions going on in a candlestick. Justin, please explain. No problem. So what it is, like if we go to a footprint chart or you look more in depth, what it's going to show is, you know how we have a bid and an ask over here. You see where gold is selling and there's buyers. So on the sell side, on the left column, when they're sellers, they're bidding, right? They're bidding. And then on the right side is the buy side. That's the asking price. You guys got to know this. This is very simple stuff. So, you know, like if you're selling something to me and I'm buying, I'm asking to buy it from you and you're bidding on it. So it's how an auction works. So the left side of the transactions will show the bids, and then the right side will show the asking price. And once all of those orders are activated, then it will give a reading on the right side at this level, at this price level. So you see, these are different price levels. See, 4,193.156, 4,192.661, 4,192.042. I can go so on and so forth. So these are all the different, you know, pending orders. And once it's transacted in here, then it will tell me, once it activates all of those pending orders, it will give me kind of the net results. That maybe it was negative delta 10, for example, then that's telling me when it activated at 4,193, it's telling me that those 10 orders that it activated were majority sell side orders. Do you guys understand that? And then once it transacts with all of this zone, then it will give like a delta reading. So then if it shows me that the delta is positive, or all of these transactions were leaning towards buy side liquidity and hit more pending limit buy orders or buy stops as opposed to the sells, then this point of control from this candle is verified. It kind of leads up to that narrative. If we're acknowledging this and we put it in the future and then we see it come in there and then we get a positive delta, then that really shows that the wick is coming out of here and it's showing me that sellers got activated in here. They were hoping that the market would push down. However, it went against them because there was more buy orders pending in a bullish point of control, and they took over and it filled all of those patient orders that were waiting for the pullback, because these orders could have bought up here, they could have bought up here, but they were waiting patiently to get the pullback in that point of control. Does that make sense? So now it picked up all of those orders, and if you were kind of looking for a swing trade, maybe in this location would have been a proper area to maybe place an order, right? And if you did, you would be currently in profit right now, where it went up 200, 250 pips, and you could still be in the money up 200 pips, still holding your swing trade. However, If you didn't get activated in here, no worries. But this is good education because you're going to see this over and over. And what you can do is place an alert. Remember the alert system, what I told you guys? When you figure out a point of control, you could either cut it in half, you could place an alert at the top, at the mid, or at the bottom, where all of those pending orders are. Then when it comes in here, as it's coming down, maybe you weren't on the charts, but maybe now it pinged in here, you got a notification, and then now you're ready to maybe dissect what's going on in here, right? And that's how you wait patiently in a disciplined manner to look for high probable setups in zones where there's a lot of orders. So this is what we call a block in a market. You guys have heard that, order blocks. So this is a block of orders resting, waiting to be activated by the aggressor. And in this situation, the market came down, but the aggressor hit all of those orders and bought it right back up. And look at the candle then. Look at what happened after all of those orders got activated. It came right back up, pushed the wick, came here and flipped. Because remember, this candle was bearish when it came down originally. Then it flipped, and look at this was a big blue candle. Blue, took out this wick, filled that high, continued, and it pierced into our bigger red zone up here. And we've got it, remember, we cut off this candle at 50%. So it came in the red zone. We know that the red zone is now like a weekly supply. And look at what happened in there. That big bullish candle came in there. And what were the results? Sellers were there on a higher time frame, absorbed all of those buyers and rejected it back down, all the way down. There could have been profit taking up there. All of these buyers in that bar could have been closing their profit up here, because you got to remember, close where sellers are, because in order to close, if you buy low, you got to sell high. And there could be orders, sell orders up here now, waiting in a red zone. Remember, there's all types of orders in here. There could be sell orders. There could also be buy orders in here. There could be traders waiting to buy up here and get activated because they want to buy the break of these wicks. So they could be like breakout traders, we call them. They're called breakout traders. Every time like a market makes a high, they're in there and they get activated as well. But look at what happens. They're buying the high, and when they get activated, there's probably delta negative volume. All of these transactions that occur here are more sell side because it's higher time frame sellers offering, and they fill those orders, and then that's where you get that rejection coming down. Do you guys understand that? So I'm trying to show you both ends of a wick, how things transact, right? There's orders all up and down this candle, but I'm showing you how some traders position themselves. And not just like, this is not just retail traders, this is like institutions waiting to get filled and activated and things like that. So you guys understand that now? I know it's a little bit more aggressive than just learning about a basic candlestick. Now we're learning about the orders, how they transact in these things, okay? And you got to know that there could be buy limits and sell limits, and also stop losses. Stop losses are also pending orders as well. Like for example, let's say I bought this candle, okay? Let's say I bought right here. If I bought right here, traditionally my stop loss might be below this wick, below the low, maybe down in here. So think about all of these buyers here too. Their stop losses are pending orders as well. And then the market can see them and comes down, and it doesn't care whether they're buy limits, sell limits, stop losses. It sees orders. You know what orders are? Liquidity. You guys have heard of that word, liquidity. I'm drinking liquidity right now. I'm drinking a rum and eggnog right now. It's liquidity. So this is liquidity in the markets. You need liquidity in order to move securities, especially gold. Needs lots of liquidity to move. So that's orders, right? And then now we can see it came up, it came down, back up, very bullish, and it got rejected. And then look at how it closed. It closed as a spin top, 50-50 in that 4 hours of trading. Just like if this was a 5-minute candle. It opened, came down, came up, and back down. It virtually closed right where it opened, but it closed a little bit above the opening price. So it's technically bullish. Just like this one was bearish. I gave it like a 60-40 split, 55-45. This thing, same thing. I would give this 60, maybe 55, 45 in favor of the buyers, in favor of the bulls, the way how it closed, right? And then the whole candle is indecision. Like it came down, picked up these orders, came up here, grabbed those orders, and then nobody really won that. So that's what we call a consolidated candle. Didn't really do much, okay? But it activated lots of orders. So the market is not ready to move yet. It's still accumulating. So it's still accumulating orders. And then look at how the next bar opened. This was near the end of the day, 1 p.m. going to the close 5 p.m. Unfortunately, Oanda, they open their candles at a different time. So it's just looking a little different here. So look at the opening price. It came down bearish, but look at what we're learning. Now you see how there's a body and a body here. This is where a bearish body closed. This is where a bullish body opened, right? So that's what I call a point of interest. You know, when I'm looking at candles, specifically where they open and where they close. Wicks tell you a story. They tell you how low it went, how high it went, but where the market opened and closed is more important, right? That's very important. So the market, after 4 hours, after moving up here and down here, it closed right there. Again, this candle, where it opened and came down and went all the way up there, came back down. Look at where it closed right there. So now you can see the next candle, it opened, and then when it opened, it was initially bearish, black, 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 but look at where it stopped. Look at where it grabbed the wick of support, right where this bullish body opened. So it's telling me that it's still respecting all of this behind, like this big wick. So then it comes back up. That's what we call a shallow pullback. It could have came down into there. It could have came right back into this green box if it wanted. That's why what I do is I stretch when I figure out a zone or a point of interest, I stretch it into the future because there may be another time, another point in time. I don't know when, but maybe it will come back down in there. And when it comes back down in there, there might be, again, this location with more pending orders waiting to get activated. Then if I see it come in there, either like equal low wick or a higher low in there, then it's telling me that that depth of market is being respected down there, and then it could continue to come back up. But the market has not rotated back down here. It tapped into that block, got everything, and now it's trying to advance higher. Okay, so it opened, pulled back. You can see how it holding support. Then it continued to come back up to the opening price. So what is the job of this candle? I always say candles have jobs, just like you and I have jobs. Every single day we have a job to do. Candles have a job to do. When they get respected from below, they should have enough volume to fill the previous wick and break out higher. That's in my head. That's in my theory. That's what I say. I say that if it picked up all of these orders and coming right back up, its job is to continue to fill this wick and produce a new higher high so we can move higher. Then when I see it come up, when it's going up, 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 and then it fails and then it goes down, that's telling me a clue that that candle did not do its job. Then it came all the way up there and it failed to complete the assignment. And then what that's telling me is, see, after those wicks got activated, now all of the offers are being lowered. They're being lowered down into here, down into here. The offers are getting lower. The pending orders are coming now down in here. Why? Because they're protecting this high. You guys understand? And that's how we get a lower high in the market. And then look at what the sellers do. The sellers are there protecting this high, and then there's no more advancement of a new higher high, and then the sellers come in and push the volume down, and then it closes with some bullish volume. So if we're moving forward right now and I look at this entire chart, we're still consolidating. It still doesn't give me enough conviction to get into a solid swing position. Maybe if the buyers can close it above here, then we could creep back up here. But there's a wick there, a wick there, a wick there, a wick there, and starting a wick here. So every time the buyers transact up here, looks like there's some resistance. And then when the sellers come down here, it goes back up. When the sellers come down here, it goes back up. So I'm just going to get rid of all of these pending lines. And then to show you guys, now we're still in a consolidated phase. I told you if this was any other day, maybe the market would be rotating and moving a little bit differently right now going into midweek. But tomorrow is the much anticipated last FOMC of this entire year, right? So it's a pretty big event. So maybe all securities are basically just cooling off, consolidating. There are some moves to make some trades, but there's no like big move that is like we can clearly define what's going on. Right now, you can still see on the 4 hours, it's still just kind of it's no man's land, right? It's going up, back down. So it's still in this situation. What I would do is I would move, you see this kind of neutral consolidated box or what I have right here? I would maybe just now advance this neutral block to right here. See now? Look, like we're in a traffic jam. You know, when you're coming home from work and you're stuck on the freeway and there's a lot of cars and you're stuck there. This is what I like to use as an analogy as like you're stuck in traffic, right? You're not going anywhere. So this candle is bearish, blue, black, blue, black. Yeah, there was a breakout, fake breakout, came back in black, fake breakout to the low side, come back in. See, the majority of the volume is just transacting inside here, not really moving anywhere. So even to trade this, like not even for a swing trade, even if this was the 5 minutes, you guys probably know what I would say. This is dog shit volume. The best thing to do is continue to be patient. Wait for maybe something to happen up here, wait for something back down in here, because both sides are still accumulating. Sellers are selling, buyers are buying, with the market moving nowhere. So if you want to engage in this, you can, but you got to understand that the market could just go up, come down, go up, down, until we have a official move. And we don't have that yet. So like all I can see is we hit a high up there, we came down. This is our December high. Okay, we're 10 days into this year, sorry, 9 into this month. There's the high, there's the low. So it came back up and then got a lower high right there. As it came back down, it didn't break that low, so we got higher low. So you see how kind of the volume is kind of getting real condensed. It's kind of getting real, like coiling up. It's coiling up. Eventually, it's going to start to expand and break out. But I think tomorrow's news will be the deciding factor. Okay, and then you can see it made a higher low, and then on the next push up, that was a really strong bullish candle that could almost have taken out that monthly high, but some sellers came in and said, nope, it's not happening. We're coming in, and look at how they advanced that down and they completely engulfed. That's one of those like FU candles that I kind of say, you can see the big rejection wick and an engulfing body. And then we had that next leg coming down, came back up, higher, lower highs, push back down. Yes, they did push it down there at the start of last night when after our call, but you follow it, still got a nice significant candle to base some analysis, and you may have potentially gotten a buy out of there and still be in it. If you're not, continue with this green zone into the future, and we're in this consolidated phase right now. So that's all I can basically say about gold. You know, when we're on a swing trading session, we can sit here and watch this for the next 90 minutes, but it's probably going to be boring. But if there was anything significant and we get into trades, we will analyze it. But do you guys have any questions about what we just went over? We went over a lot. So because I want to do a nice analysis on oil as well. So do you guys have any questions? Yeah, New York is much better for volume wise. Tokyo's are kind of this type of session, like consolidated, choppy. But as of late, when we're watching gold, like on the 5 minutes, we've had good moves. Like, you know, like I'm a scalper. So, you know, there's some good moves. There was this afternoon sell on this second leg. There was the liquidity grab, guys, unbelievable setup. And we got that leg pushing down. And then it came right back up and then pushing right back down. So even the 5 minutes right now are doing nothing. You know, they're just coming down, barcoding, came up, back down. This is choppy stuff. So some trading days are better than others. That's why it's our job as traders to identify what is good trading volume, what is volume that we have to stay away from. Stay away from it. If you see that there's choppy volume, the best thing you can do, and your future self will thank you, is walk away. Don't even trade. Don't engage in this garbage, because you're just going to get frustrated. You're probably going to get pissed off. You're probably going to make some mistakes. You're probably going to give back some gains. And that's the last thing we want as traders. So we want to trade flowing volume, good volume, you know, like trending volume, where it's where we can identify like a trend, what's going on. Like it came down here, went back up. There's the neckline. Here's the second bottom building. There's the body that closed. If you identified right there, the point of control, there was one pullback, another pullback, and another pullback. So these are 4-hour candles. You had 4, 8, 12 hours to get involved in this, in these orders. If you didn't, you missed out on that swing run up, right? And you can identify how it's developing. If you cannot see this, like there's one leg down, there's your neckline, there's your second leg. Second leg has a high probability of being the leg with the more volume. There it is clearly. It pushed up, big blue candle, closed above, structural candle, important candle. Right away when you see that, go straight into cutting it. Cut it in half. Figure out the point of control. And if you missed that 4-hour bar, you had another one and another one. There was 3 attempts for you to get involved in those pending orders. And look at the results now. If you did that, look at the run up. And that could have been your weekly goal. You know, that's a big run up. So that's what we got to look for. Right now where we are, we're just, I just don't like what I see here. You know what I mean? I'll be honest with you guys. Like I see from the monthly high, it came down. Then it came back up, lower high, pushed down. Did not break for that low. It stopped right there. Came back up. I see that was strong, but look at, they kept it below this yellow line, the big FU candle, and then they advanced it right back down. It was coming down, looking like it wanted to break last night, but that big bullish candle said, nope, it's not happening, and came back up, and then there, pulled back into 50%, and this is the move coming right back up. But it's struggling, like we should see it continue to break out, but it's got a wick and a wick and another doji candle. So if it kind of doesn't advance out of here, it could probably sell back down and we could see what happens in here again. It's already been like contested. So maybe if the selling is coming down with higher time frame volume, it'll probably break that and maybe test this red line or maybe the monthly low, right? And then this could dictate how FOMC goes. Then it could sell back down, right? Then that's what we look for, okay? Right now, it's hard to say where it wants to go right now because it could continue driving bullish and it could also sell down right now, okay? So that's for gold, guys. That's why swing trading is not the most attractive thing to do when you're live because it takes so long for these things to develop. That's why I prefer going in the lower time frames, like 5 minutes. But if you learn what we're doing on the 1 minutes, 5 minutes, you can apply this to anything, right? That's what I was saying. For education, it sucks because if we're just following this candle right now, we have to wait 90 minutes for this thing to close. If I go on the 5 minutes, every 5 minutes, I'm explaining a candle to you guys. Like, you know, I'll tell you guys if I see whatever I see, bullish, like I'm doing it live with you guys. But this can expedite your trading, your learning, and then you apply it to the time frame that you feel comfortable. Swing trading is nice for everyone that has a busy lifestyle, right? Not everyone has all day to stare at computers all day. I don't know who does, but swing trading is nice for parents. It's nice for if you're working a full-time job or a part-time job, you can just identify critical areas, points of control, place some alerts, and let the volume come to you. Eventually, the volume will come to you, and if you pinpoint the high probability areas or points of control, then when it comes to you, then you just trade responsibly with proper risk management and let the trade play out and see what happens, right? I'm not saying to go all in, but just see what's happening. And maybe you may fall in love with this style of trading. Maybe you will become one of the best swing traders. Maybe you'll fall in love with this. Maybe you'll give up scalping. I'm not that guy. I will never give up scalping, but I swing trade. I can swing with the best of them, but it's not good for live TV, right? It's good for your own personal business, what you do with this. I like to scalp and swing trade. I have 2 accounts and that's what I like to do too. One account is focused on swing trading and swing trading only. My other account is focused on just intraday trading and scalping. And I combine both of those accounts and with profit with those things, then I move them into the stock market and I look for sound securities like Apple, Nvidia. I look for dividend securities that pay passive income. So as I get older and I'm drinking rum and eggnog, I'm getting paid money in passive income from dividends given to me, where I get my money working and making more money, right? My money is my worker, not me. I try not to work as much anymore. It's enough to sit at the computers and stare at charts all day. So once you get in the habit of this is when you're taking your trading now more to an investing side, where now you're earning passive income. The banks are paying you. Your financial institutions are paying you for your hard work. You are getting recognized. You're basically like an employee to the bank, and they're paying you through dividends, through covered call options. If you own 100 shares of a certain security, you can do covered calls. And we'll get all into that in the stock trading education, but just some food for thought, something to think about, guys, because it's not always about just Forex and futures. Like that's what a lot of people just see is just Forex and futures. There's not much going on in the stock and options markets, but it is trillions of dollars going through Wall Street on a daily basis. And if you're sleeping, you're missing out. Okay. So that's what we're going to get into in the new year. Okay. Guys, so I'm going to just finish up with gold. Like there's nothing going on right now to suggest any type of setup. The only thing that I can maybe suggest is if we see blue 4-hour volume, maybe closing inside here, like maybe it runs up to this 50% of that candle, maybe comes in there, gets a wick, but closes blue here. Then maybe what we're looking for is a retest like right here, and maybe could be a bullish run continuing to break out for FOMC. But it's kind of, I wouldn't even attempt to do that prior to the last FOMC. Like I said, if this was any other day, any other Tuesday going into a Wednesday midweek, and there wasn't this FOMC, then maybe we would be looking for a possible setup. But it's just too risky, in my opinion, to take a swing going into FOMC. Because anything can happen, and the volatility would be so intense that maybe even if you have a 200, 300 pip stop loss, it could get activated and you're stopped out and you miss the move. So in my opinion, if you guys trust me, I would, intraday trade if you like, but looking for swing trades, I would wait for after FOMC, let them release the results, let Powell have his speech, wait for the markets to close, and then we pick it up on Wednesday night. Then maybe we'll look for a good setup going into Thursday, Friday, because we still have another 2-3 days remaining in the week, right? So, but right now, you guys, if you don't agree with me, I don't know what else to say, but it just doesn't look like a good setup. Even with how the volume is trading on the 4 hours, it's not good. We don't see any nice big body candles to base anything off of. The only thing we could base anything off of was this one earlier in the morning, and that's about it. Okay, so I want to do one analysis, guys, before we wrap it up on oil. Okay, so you're going to learn how to do a top-down analysis. Right over here is oil. Okay, so this is how oil is trading. I'm on US oil, right? Have any of you guys traded oil before? You guys might be virgins, and Ron might pop your cherry right here, where you're gonna now trade oil for the first time in your life. So it's a security. It's crude oil. But did anyone when Ron is gonna tell a story? Now it's story time. Your unc is gonna tell you a story. Do you guys remember the pandemic? Anyone remember that pandemic a few years ago? Crazy times, lockdown, all that shit. Did anyone hear in the news that it was the first time that crude oil futures went negative since 1970? Did any of you guys hear that in the news? Or was it just me? No? Justin, for real? You never heard that? Borkat, you heard it? Carl, yeah? Let me show you guys. Remember the world got shocked with the pandemic? Had no idea what the hell was going on. Oh, this chart doesn't show it. Shit. Oh, yeah, here it is. So you guys remember back in March 2020, pandemic, everything froze. Flights were not flying. Trains were not training. Cars were not driving. Nothing. The whole world stopped, basically. And look at this, okay? I'm going to mark 0 on the chart. Where's 0? Somewhere in here. There's 0. Look at this. Guys, this was a monthly candle, right? Wednesday, April 1st, 2020. And crude oil, when the pandemic happened, this was like a buy of a lifetime. I have a lot of friends and family that I told them to take some call options on crude oil, and a lot of them, you know, are doing really well in this time right now. Why? Because look at it. It came down to on this chart. Remember, this is Forex. It's not futures. Forex went negative. Futures went negative. First time since 1970 that's happened. Okay, so this was kind of like a buy of a lifetime if you were in the right spot with the right education at the right time. When that happened, you ask yourself, is the world gonna run with no crude oil? I don't even think, even if they go all electric, if they made the whole world 99% electric, you would still need oil to power some sort of electricity. So that I'm a firm believer in fossil fuels, in oil. Electric is nice, but I don't think it's going to take over the world. So that's how I went about this. So when I saw this come down, light bulbs went off, alarm bells went off, alerts went off. And look at the months after that. It went up to $34, $40 a barrel, pulled back to $36 a barrel, broke out over here 76. And then if you guys remember, February of 2022 was the first missile launch from Russia to Ukraine. And this is when oil spiked all the way up to these highs, $130 a barrel. That's the all-time highs up here. During the financial crisis, if you guys remember in 08, it got up to $146 a barrel. And look at that. When you're talking grabbing liquidity, when you're talking about what is going on in the market, look at that opportunity of a lifetime. If you were trading futures call options, if you even just bought when it went to negative, if you bought the $10 call option, 20, 30, 40, 50, holy fuck. That's all I'm saying. Sorry, excuse me for my French Canadian there, but that's what we gotta understand. Do you guys get this? Like, you're gonna see this in some securities. You're gonna be like, how did this even happen? Right? Why am I not even considering buying crude oil? Right? You know, while other people are sleeping and they're stuck in lockdown, we were hustling. We were working, guys. We were figuring out what's going on with crude oil. We were figuring out who is making these masks, these Chinese companies, AHPI. They were trading at 40 cents. I think they're not even on the stock market anymore. They were a pure pump and dump company. 44 cents. They ended up being $50 during the pandemic. If you follow when there was COVID, who is making these vaccines? Pfizer, Johnson & Johnson, AstraZeneca. AstraZeneca is a security that trades in NASDAQ. Do you guys know this? Guys, let me just take you a little further what I'm doing on our stock education over here. In stock education, if you come all the way down, you scroll through our courses, go through the boot camps, come through the webinars. Right over here, I'm working on this, and it's not finalized. But this is the Dow Jones. So when we're trading Dow Jones, what are the 30 securities in Miss Jones? So you got to know a little bit about Dow Jones. It's consisted of Goldman Sachs, Caterpillar, Microsoft, American Express, Home Depot, Sherwin-Williams, Visa, United Health Group, Amgen, JP Morgan, McDonald's, IBM, the Travelers Companies, Apple, Salesforce, Amazon, Johnson & Johnson, the Boeing Company, Honeywell, NVIDIA, 3M, Chevron, Procter & Gamble, Walmart, Walt Disney, Merck & Company, Cisco, Coca-Cola, Nike, and Verizon. Okay, so that's the index of Miss Jones, US, but NASDAQ is more tech heavy. And this is not just American companies. These are global companies in here. A lot of NASDAQ traders don't know this. So this is why we got to get into educating, guys. So it's in number one, NVIDIA, Apple, Microsoft, Amazon, Alphabet A, Class 1 Google, Alphabet Inc. C. You got to know what these are. They're two publicly traded companies with different class shares of Google. There's Broadcom, Meta, Facebook, Tesla, Palantir, ASML, Netflix. Netflix is in the news. They're in a big hostile takeover of Warner Brothers with Paramount right now. Costco, AMD, Cisco, AstraZeneca. you can see like this is a security in NASDAQ. So, this, if you see, then you click on this, and then now we can learn a little bit more about what AstraZeneca is, the whole history of this, recent developments, future outlook, and any other information you need. You can click on this. We go to over here to Slick Charts, and we can get everything. The price of AstraZeneca is $90. It changed this month, this previous close. We can get lots of information. We can go directly right to a chart right here. These are what are called these are called like a different style of looking at candlesticks over here. If you want, I go to candles right over here, then we can move it right into here. We can see, do they pay out dividends? They do annual dividends, a certain percent. You can really start to take your trading a little bit more serious and then start to get involved in swing trading, actual publicly traded companies. So it's not just we're focusing on just like gold all day. You know what I mean? You can really broaden your educating. Okay, so I'm going to do that for NASDAQ, finish it off, S&P 500. I like to do all ETFs. Those are nice ETFs, mutual funds, breaking down what are mutual funds and getting more into there. And we can literally be trading those as well and looking for what is moving in the markets. We work as a team together. If we see that the market is shifting to a different sector, then the more eyes we have learning and researching, the better we do as a team of traders. It's basically like a trading floor. You know what I mean? You guys and me together, we can do something great for each other. Like we can really, the markets are so big. It's unbelievable how many securities there is to trade. But sometimes every day, a certain sector is hot and a certain sector is cold. You just got to kind of follow where the money is moving. Once you follow the money into a sector, you can dissect the sector. You can see where it's going into. You guys remember when I trade US 30 a lot, right? Dow Jones. You guys know that United Health, UNH, they were weighted for a long time over 10% of the entire index of US 30. That one company was worth 1/10 of the entire index. Now it's gone down to only 4%. It's gone down to 4% of everything that's happened in the United States with the healthcare costs are getting extremely high. Donald Trump is really axing that. And come 2026, I feel sorry for everyone in America that, healthcare, whether you, honest truth, I don't live in America, maybe you do, but your medical costs, health insurance are going to skyrocket because he's eliminating all of that. So that's why United Health, if you look at its share price, it has dumped and a lot as of late. So will it come back up? I don't know. So these are things that you got to kind of look for. What's taken more of the weight on in US 30 is if you go over here to Dow Jones, we see where is it? This company performance cumulative weights right over here. So you see now all of the 30 companies right over here. You see Goldman Sachs is number one now. So that's why I'm following Goldman Sachs. I'm following Goldman Sachs on my charts when I'm trading US 30, because look at it now. Goldman Sachs has a price of $876.65. It is weighted now 11.35% of the entire Dow Jones index. So when you see cumulative weight, this is what we have when you add up this next security, number two. It's like, rankings in sports. It's like, NCAA football has the top 25 teams. Alabama's number one. Ohio State is number two. Like the big teams, Michigan is number three. This is like kind of like sports. If you guys watch sports like me, this will make complete sense to you. So these are the top 30 securities, top 30 teams in Dow Jones, and Goldman Sachs is number one. And then look at number two is Caterpillar. Some of you guys know what this is. This is the big farming equipment, the big bulldozers and things like that. Caterpillar, construction. So they're priced at almost $600 a share, and they make up 7.7%. So when you add these two together, cumulative weight, just Caterpillar and Goldman Sachs together are 20% of the entire Dow Jones. Guys, I know some of you guys are probably saying, well, what the hell is this guy doing? Why is he even talking about this? I thought we're talking about gold. Guys, this is prime time education. If you guys are sleeping on this, I'm sorry, but this could take you to the next level. I'm really telling you. And these things reshuffle all the time. So you see now, where is all for years it was United Health was number one. Where is UNH now? Look at, we got Microsoft, American Express, Home Depot, Visa. United Health is now in 7th position right here. And they've gone down to $323 a share. Look at, they're only now 4.18% of the entire weight. So they've dropped dramatically, okay? And then it goes as lowest. Like if you're following Nike and Coca-Cola, like Coca-Cola only doesn't even make up 1% of the entire Dow Jones. You see, so when I'm looking at cumulative weight, like when you see the top, let's say 60, 70% are just the first 14, 15 securities. You don't even really have to analyze the bottom half because they don't make up too much weight. So if Coca-Cola has an amazing day, they're not really going to make an impact on Dow Jones. You guys understand what I'm saying? If Goldman Sachs has an amazing earnings, they're going to drive this entire index, right? If Goldman Sachs has a really shitty earnings and Goldman Sachs, the company is down 5%, then Dow Jones is going to be going down. Yeah, probably it's going to be a selling day, right? Just how these things are based. And you got to understand one more thing. The way how these things are weighted is completely different, okay? Dow Jones, why a lot of traders hate trading this is because it's an old school way of weighting it. Okay, what it is basically a price, the price. Look at the bottom one is $40, $63, $70, $80, with the highest being the highest price, right? And when securities do stock splits, it can affect this. So you got to be very careful with this stuff. But that's how Dow Jones. Now, when we look at NASDAQ, NASDAQ is different, okay? NASDAQ it's weighted differently, okay? When we look at the cumulative weights of NASDAQ, okay, now it's the market caps, okay? So they go by market caps. So how do you get a market cap of a company? You basically take the share price and multiply it by the outstanding shares, okay? So you take the price of a company. If it's $100, the price of the company, and there's 10 shares available on that company, 100 times 10 is $1,000. The market cap of that company is $1,000, okay? So when we multiply all of the outstanding shares of NVIDIA, multiply the share price, they're sitting their market cap at 4.48 trillion. They were the first company in the world to hit 5 trillion, but since this pullback, they've dropped a little bit. So you see now NVIDIA is number one market cap on NASDAQ, and it's weighted 13% of the entire NASDAQ. NASDAQ is 100 companies, and just one alone, NVIDIA, is 13%. Number two, Apple. It's a $4 trillion company. Apple and NVIDIA make up 25% of the entire index of NASDAQ, right? And then when you start to move down the list, Microsoft, Amazon, Alphabet, which is Google Class A, Broadcom, Alphabet Inc., the Class C shares, and Meta, Tesla, Palantir, like the top 10 are 70% of the entire NASDAQ, right? You don't even need to follow the bottom half if you don't like. Like some of these companies, probably you've never even heard of. How many of you guys have heard of, I don't know, Ross Stores? Have you guys heard of that? Workday? Have you guys heard of Baker Hughes? Like, I don't even know if some of you guys have heard of these things, but some of you guys have heard of DoorDash, Starbucks. You know, Starbucks is here. They're only 0.28% of NASDAQ, basically nothing. You know what I mean? So you got to kind of focus up here, right? And you got to know how these things are weighted. Then we can look into S&P 500. We can look into ETFs. We can look into crypto. Crypto has a market too, market caps. Bitcoin is up here. Ethereum, Tether, XRP, BNB, USDC, Solana, Tron, all this. It's there for you guys. So it's a really cool site. Slick Charts. It's called Slick Charts, Justin. Okay, so let me just, sorry, I don't know why I went off topic there, but that's just to what's going to be coming in the near future with us at SST, okay? But I was talking about oil, okay? So there was an opportunity of a lifetime there. You know, it's passed by, so, you know, maybe another time will come up. But you see kind of like this zone, like if we're studying zones, you know, like right here, if we start with just looking at over here, see where we peaked up in the 1990s? Okay, that's a point of interest. If we just drew a line right there, okay, so I'm on the monthly, see there, it came up in 1990s, pushed down, came up again. When did we break out? 2004. There was a breakout. Again, guys, if you don't believe me, if you miss a breakout, if you wait patiently, the market will come back to you. Look at it, closed above, it broke out. Okay, if you wanted FOMO, you know, in 2004, if you wanted to buy crude oil at $50, $52, $53 a barrel, you kind of bought the highs. And in the next 2 months, look at it, pulled back to retest, back at $40. Then you could have got in, activated, and look at it, made a new higher high, kept going, pulled back. Then we had the big push in 2007, 2008. You know, there was the big push right up to the financial crisis. That was how high we got, all the way up to there. $146 a barrel. And look at that. Look at the big dump come back down in oil, and look at what it retested. Look at the same point of interest, the $40 area. And it continued to come back up, but it didn't come back here, lower highs. So you can see we've got resistance right here. Okay, you can see when it came up, back down, didn't really break, and then elevator come back down 2014. There was a lot of shit going on in the world in 2014. That's when Russia really started with Ukraine and Crimea and all of that. You know, war affects crude oil, and if you follow geopolitics, if you follow those things, it will make you that much better of a trader. Same with gold. It's affected by all of these things. So look at where it came back down. And you see how many times kind of it broke, but recovered, broke, recovered, came back up, again, a lower high. Where did it come into? Guys, you know, like these are those three crows coming down, your mid bar. If you cut that in half, like I'm telling you, it's like clockwork. It's the same shit. Like you cut the second bar right there. Why this second bar? Right? Is Ron just guessing that second bar? No. Look at, did this bar close below any of these? It did engulf a lot, but did it close? Was it the confirmed bar that closed below this wick, this wick, this wick? No, it was this bar that officially closed below that wick, and closed below also these candles. So that's a great candle. This is also, you should cut this one in half as well. And if it comes up there, that's your next level. But this one, look at it. Like that's your bar. You can figure out your point of control of that candle. Guys, I'm telling you, like anything you do, I'm telling you, this style has been trading since, working since the 1970s, 50s. This is all mathematics, right? So you figure out the halfway point, you figure out your point of control, you stretch into the future. You could have been waiting for crude oil to come right back into that pocket, and tell me what happened. Came right back in that pocket, went down. Is that not a double top? Did it come in one time, go back down? There's a neckline there, just like any other time frame. If these were 5 minutes, there was that second top. Liquidity grab. Justin, was this not today's setup that we had on gold? Same shit, just on the 5 minutes. It came up. Remember, it came down. We figured it out here. And when it came up, it was approaching noon. And I said, guys, let's watch. Let's wait for noon to see what happens. And on our call today, it's the same exact setup. They took out the liquidity. There's how crude oil did it on a monthly. And there's your confirmed bearish bar. And look at, now you're just using what you've learned here at SST. Is there a wick on that bottom candle? No. Did it open? Did it come in retest? I would have cut that, you know, in half. No, as soon as it came up, they pushed it down. There's no wick. Short wick, short wick. That would have been a proper area to execute a short position and place your stop loss either above the point of control of that candle. You know, if you're really tight and aggressive with a stop loss, that's real tight, but at least up there. And then look at what you're aiming to come down to. I would be, if I was trading this structure, looking to trade right back into here. And then when it comes in there, that's when I would be, you know, securing 80% of load, bringing down my stop loss to break even. If it continues to advance down, I'm targeting one more structural area right there. And that's it. Take out my entire position, leave 20% running. And then if it comes back up, look at it. And then it comes right back up where you entered. Look at it. Spike the liquidity right there. If you had a break even, they take you out. And then the market kept pushing right back down. So guys, we go over this on a daily basis, live on the 5 minutes. So there's no different if you want to do this on a monthly. And these are big pips. Like these are monthly candles. These are not 5-minute candles. So, and then you have kind of over here, 2020, what happened. And this is where we are now. So you see, I'm going to clean up the charts, guys. And this is where we're at now. So it is making a move from up here, coming back down. It tried to come back up, just kind of consolidating here, but made a new low, tried to come back up, and it's still pushing down. But the volume is thinning out, okay? So we could see a proper move coming back up, but I still think maybe if it wants to go down, it's still got some room to go. So let's do an analysis. I'm going to go to the weekly, guys, from the monthly to the weekly. And now we're just going to look at some weekly zones, okay? So more so, what do we have in here? So here's a good zone to identify right here, right? Now that it's already happened, it's easy, okay? It's already happened. I can see it came in there, back down, couple aggressive wicks, came in there again, double top, the drop, came back in there and back down. So I've identified the zone, stretched it into the future. Where is it about? From anywhere from $90 to $95, cut it in half, 92.50 cents, and make it yellow. And I'm going to place an alert. I'm telling you guys ahead of time, if oil comes back up in the near future and it pumps all the way back up to here, I might be selling it. I might be looking for my move there. If it closes above, I'll retest this, make it green. I might be buying oil back up to see if we go to all-time highs. That's the way how I look at it, okay? But since then, lower high, lower high, lower high, lower high. What's the trend? The trend is from here. If we connect the dots, we're pushing down. Now I'm connecting from this point to that point, A to B. Now I'm not going to play around with this and just do it like this. I'm going to go from A to B and just leave it, plot it as if. Then I see that was kind of a fake breakout right there. Came back in. There was a time over here in 2025, June, where it wanted to properly break out, but it came back in and again retested, and we're still below this yellow line. So I can see that there was a couple attempts that it tried to break out right there, and it failed. It tried to break out right here, and it failed. Okay, I'm not one of those guys that just kind of plots a trend line. I put it how I would normally put it. If I was plotting it from here, A to B, then I let the trend line play out, right? I don't play around with it. That's what I see a lot of going on today, is a lot of traders don't know where to place tools or indicators. Just go with your first initial gut reaction. From if I'm plotting it from here, I want to go from A to the next touch B and then let the trend line do its work, right? Some traders will say, well, Ron, why it's already happened? Why don't we just plot it at those wicks and do it like that? That's fine. But it doesn't really show me that there was a fake out. There was a fake out. It still shows me it's within the trend. And that's not in fact true. If you plotted it correctly from at that point, then you can see that those buyers got faked out. They got faked out. And the market kept coming down and the volume is still below here, okay? You guys understand what I mean by that? You got to go with your analysis. You can't kind of make it where the market is, because then you're fitting the narrative of the market, and you can really see. Then you can learn about liquidity grabs. You can learn about manipulation. You can learn how buyers got screwed over there. And then you look at now when you want to research, when you want to learn, you can go into these months. June, what happened? Do you guys remember what happened in June of this year? Do you guys remember what happened June 16? The whole month of June, some shit happened. What happened, right? This is when you can go back and look at news and then see what impacted this move, what brought it right back down. You can go right over here. January, the beginning of the year was a breakout, then they brought it right back down. All of that, a lot of things happened this year. Elections, Donald Trump. Remember, April was Liberation Day, the tariffs, all the bullshit. June was all these things, okay? So if we're looking at a trend, it is still, pushing down, in my opinion. Now we got to kind of find maybe a base of support. I can see that there's a wick there, down in here. So you can see where there's good supporting level. If I look right here in the past, right? Because now you guys know me. I can spot these things. I know how this works on the 1 minutes, on the 5 minutes. So there was an ignited bar, came up. and then I can see a wick at 50%, a wick lower, a wick in there. So you guys know it's transacting. Remember, did we not just talk about pending orders? Did we not? And if you extend the zone into the future, it might take multiple times it comes in there. There's a lot of pending orders. This is crude oil after a big pump in the 2020. Then it went all the way up to 65, 67, $68 barrel. And we got a proper pullback and it filled back up in there. And then where did it take us? To next leg up, right? So that zone now is identified all the way from early 2021, stretched it into the future, same zone. Now I can see they broke it, but no bearish volume closed below there, back up. That one came in there, closed inside of it. One more here, May, came back down. If you sold the lows, you got screwed, right? And then it came back up. If you waited for those bars to close, you would have saw it closed above, and you could have maybe had the buy coming right back up. But when you're buying, you got to also know where your levels are, where there's sellers, okay? I haven't got into that. I'm just figuring out supporting levels and like a supply and a demand zone. So you can see right now, we are literally trading again in this green zone right now, okay? So what I would be doing now is checking out these weekly candles. They're doing something. Like, look, they came down here, nice push, and then came back up. There's our neckline. Came back down. Second bottom, traditionally is the bottom with the bigger move. Right there. Why did we not have this? Ask questions. First week of December, why did we not break out? It was shaped up perfectly. Double leg, Ron always says, has that higher probability of breaking out with bigger volume. It didn't happen. Right? And look at how the next week opened. It couldn't even take out that wick. Okay, so now it's a bearish engulfing candle coming right back down. And this candle has 2 days and 21 hours to go. So will this now come all the way down and close below here? If it does, I'm going to flip this green zone red because it still might be having room to sell down. Then we're looking at 55. $54 a barrel. Look at those wicks right there. Automatically mark up those wicks. Okay, look at, you have to mark those wicks because when the market came down to $55, it went right back up. It came down a second time. They look like equal bottom lows, tweezer bottom lows, and it punched right back up. Now the market maybe wants to come and retest that or push lower or build to continue to break out. So that's the only wicks right now in the weekly holding up oil. $55. Okay, and then if we look below this yellow line, look at it. We're cutting this big bullish bar, right? I know that that's probably the top of the 618. Watch. See this big bullish candle? Did it not close above this wick, this wick, this wick? This is a structural candle that closed near the high. Next bar opened, ignited, and took off. And now I look back, not only did it close above these wicks, that wick, it closed above all of this bearish structure. You see this leg that came down, back up, and pushed down? We cleared that with this candle on the week of February 1st, 2021. Heads up, guys, my birthday is the next day. Groundhog's Day, February 2nd. Groundhog's Day. Good movie with if you guys watch it, okay? Look at that. Now, let's go down. 50% right there. Our point of control of this zone right there. Stretch it into the future. Happy birthday in advance. Thank you. I'm going to turn 20 years old. I cannot wait. It's good being young. Some people don't believe I'm only 20. Okay, look at it now. Now, does this make sense? We're doing some backwards analysis, right? You gotta be on the charts in order to get some moves, right? You gotta work hard. Yeah, it was Bill Murray. Yeah, it was Bill Murray. Old school movie. And look at the wicks now. So now you can see it clearly came in, tapped the top of that box, up. Next one came down. Did it come in? No. So let's advance this into the future. And you see my yellow cut line? I'm adding an alert. If it comes in there, I might be buying in there, right? So this is how I'm getting ready for swing trading. No, I'm not 20. Holy shit. I can't believe some of you guys believe me. No, I'm going to turn 44. I wish I was 20. I got a 14-year-old son. Oh man. Okay, so guys, you see what I'm doing now? I'm locating some high probable zones, looking in history all the way back. I'm not looking last week. I'm looking back in 2021. Last time I checked, we're almost entering 2026. We haven't came into this block for over 5 years. Okay? So it may come to us. It may not. Maybe the buyers are going to bring this right back up, and we're barcoding in here. Blue, black, maybe blue. But I can see right now, see this big bearish engulfing candle? This one closed below structure. Let's just go through what we do. Open, close, that's a significant candle. 50% of it right there. The bearish point of control of this candle, 382,618, right there. Red block. Figure it out, stretch it across. Okay, now the chart is making a little bit more sense. So now I can see the buyers come up, where? Right into 50%, push down. They came up one more time, strong that week right there, October 20, they got pushed down. Lower high, lower high, lower high, lower high, push down. But we're not making any new lower lows. Now we're still in here. That's where I asked questions. I always do when I see something suspicious. Last week, oil came second bottom, closed, engulfed, proper setup, open. It should have taken this out, and we should have seen the advancement. Okay, that's where I would be looking to maybe take a swing trade on that leg going up. But this week now negated it. You can see how it opened, and look, it opened and could not even fill that wick. Remember, a candle has a job to do. It's got a job to do, just like you and I. We have a job to do. It opened and it couldn't even take that out. So it failed. And it came up lower high. And look at the sellers. Sellers are in full control this week. I know it's still 2 more days to go, almost 3 days. But right now they're engulfing. So what I would be looking for is to see what are they going to do down here. Okay, I'll make this. If it gets down to $58 a barrel, but I would be more concerned with down into these bodies, because these bodies are holding majority of wicks down in here. So I'd like to see what's going to happen at $57.50. That doesn't mean I'm going to buy, but I want to see, is this bar week going to close below there? Because if it does, it could continue to fill those wicks. Then the best buying opportunity would be down here. Remember, I'm looking for high probable setups, okay? I'm not just looking to trade anything right now. So right now, you got a little bit of this move coming down, right? Attach A to B, those wicks, extend it down. We are descending right now, okay? But we are kind of in a little bit of a, if you want to call it an uptrend, still building. We are in a pennant right now. So it's just stuck in here. But you and I are smart that oil is not just going to trade in here for multiple weeks. So this is where we got to watch for clues. Are they going to come down here, do something like this, and boom? If that's our A+ setup. Take out the liquidity, bounce off here, close inside here, then it's gone up. Or, is it going to continue? Like, what do you guys know about crude oil? Do you guys know what's going on around the world? There's a lot going on in Venezuela right now. There's a lot going on in Russia right now. There's a lot going on in the Middle East right now. So you got to follow, what's going on in the world to understand the price of oil. And what if this comes down and closes below? It's coming back up, and we've already made this zone red, and then we get this and another breakdown. So then that good buying opportunity is going to give us even a better buying opportunity. Then you got to continue to see, look at right there, wick, 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 wick. Again, like right there, $51.50, like right in there, just above psychological $50 a barrel, like right in there. That would be prime time buying. I will be buying contracts. If it comes down to $50 a barrel, I'll be looking futures. I'll buy $55, $60, $65, $70 contracts. I'll hold them. For leaps, I can hold leaps are known as quarterly contracts. You can get 3 months, 6 months, 9 months, 1 year out of the money and hold them. And that's a real proper swing trade where you're holding for multiple months. And then the faster it goes, you got to see then your implied, and with implied volatility, with time decay, your options can go up 100, 200 to 1,000% or more. You just got to catch the move, right time, right place, and you could do good. So right now, I want to pay attention to oil. So we're going to leave this on our swing trading charts. We've got gold, and now we got crude oil. Okay, so that's on the weekly. But now what we do is we break it down to the daily. So now we can see how the daily candles are trading in this weekly pennant. We've got our zones above us, right? So you see now how the daily candles are making some moves. They're real choppy. Look at how gold, gold oil, black, blue, black, blue, black, blue, black, blue, coming back. So it is very tough on the daily. We're still inside here. So we got to let it continue, simmer, let it cook. And then from the daily, I can see a nice big bearish candle coming down. I could cut that in half, but it's still inside this pennant, so I don't want to kind of trade inside here. So we look on the 4 hours, and then you can see kind of what the 4 hours are doing. So the 4 hours came down now into our bigger green zone, and then they pushed right back up. Now they're coming down, so they're still trading in here. What we got to kind of see is who will accumulate more in this green zone, because remember, this is a big weekly green zone. It's pending orders, so there could be pending sellers that got activated, more pending sellers that want to get activated because they believe that oil is going to continue to sell off. But there's also a lot of pending buyers located in here that are buying this dip right now. They're getting activated, but it's still inside here. So I think what we got to do is watch on the 4 hours to see if we can get oil coming back up bullish, closing above here, retesting this. That could be where we potentially take a swing buy, like I'm just saying hypothetically, above there to take out some highs, maybe start trading up into the 60s, maybe up into this block in here. That would be more for buy side. Then we fill up these wicks. All these wicks behind us get filled up and we break out. But we have to respect this big block up here because this is where it traded back in October of 2025 and pushed down. This is where we came back in there of October and pushed down. So that would be more for buy side trade idea. If I get some volume kind of closing above here and I'm looking for pullbacks in here to take that, okay? So you guys understand like what I'm looking for? And then if the market, who knows, continues to sell off on oil, then I don't want to be selling in a green zone because it could just come down a little bit and go back up. I want to see if oil is really going to sell off, then let me see some 4-hour candles close below $57, close it below so that I can flip this entire green zone red. And then when it's coming back up, then if the sellers are there now offering, then we're selling back down to there. Then I could potentially start to look for maybe a swing sell to come down, swing sell, taking it like right there, applying my stop loss, where's the previous high, wherever I want to put it, and then I'm targeting this zone, maybe if it breaks down further, but I want, just like I'm scalping. So if it comes down there, I could close out 80%, leave 20% running, and then we'll continue watching what's going on, because I got to respect these buyers in here, because these buyers are salivating all the way for multiple years, waiting. Who knows how many pending orders there is in there, and I got to respect that, okay? Unless I get the move I'm looking for and it cuts right through there and it's very bearish, okay? So that's what we kind of got to look for crude oil in this week and next week, is what comes out of this zone. What do you guys think? Bullish or bearish on oil coming out of this zone for a swing trade? Bearish. Oh, wow. Okay. Yeah. Okay, so that's what we're going to watch, guys. So just to recap what we did, we talked about gold. Gold is still, look, it's moving up right now, okay? So the futures market has opened up, and it's basically right now. So that 4-hour candle, because it was so small like a doji, the first, 5-10 minutes of futures market open is representing that 4-hour candle. So it's kind of deceiving, but this 4-hour candle has 45 minutes to go, and then it will close. If it closes above here, maybe check out 50% of that candle. Maybe if you get a pullback, could go into there. Trump is speaking right now on Drill Baby Drill. Okay, so that affects crude oil. If Trump is going to be drilling, okay. So that was second session of our swing trading. So kind of giving you what to look for, but in my opinion, the best thing is setting yourself up with alerts, right? I don't know when these 4-hour candles are going to make the move. I won't be probably live with you guys, but that's why we got to set up with some strategic areas with alerts, and then you follow your price action skills. You got to follow, you got to be disciplined, see where it closes, points of control, points of interest, pullbacks, things like that. No FOMO buying, right? If you miss a 4-hour candle, you miss it. You miss that bust. You got to wait for another one. But the point of swing trading is you're not going to be staring at the charts all day. You can set yourself up, like me, how I'm going to set myself up with oil. And when oil finally gets there, it will alert me, whether it's next week, whether it's tomorrow, whether it's 2 weeks from now. But then I know I'm setting myself up for a good potential swing trade position, right? And I'm looking to hold that not just for 30 or 50 or 100 pips. I'm looking for a real move. You know what I mean? Real moves are 500 to 1,000 plus pips. Or depends, whatever you're trading in the futures, could be contracts, things like that. But yeah, guys. So what else do we got to go over? Tomorrow is the big day, right? Markets could just continue just trading up, coming back down, but remember tomorrow is FOMC at 2 p.m. Eastern. So we're going to do it. Dave is doing live with the snipers at 8 a.m. in New York, and I will be coming in and I will be doing the FOMC session at noon. We're going to start noon tomorrow, okay? 12 p.m. Eastern, and we're going to go to 3 p.m. Guys, there's a free Telegram channel pinned at the top of YouTube for you guys. Thanks, guys, for joining. I know we don't get a lot of viewership on whenever the title says swing trading. I know it sucks, but I believe that if you guys are joining me on these sessions, not only are you learning about swing trading, but you're really getting a proper education on price action, because I'm taking my time to break down a lot of concepts that we do when we're scalping the markets. So believe me, guys, it's not a waste of time. I'm going over a lot of things with you. I went over even the stock indices that gave you guys a little look at to what to pinpoint when you're trading US 30, when you're trading NASDAQ, show you the cumulative weights, show you how they're weighted, maybe look at the top couple companies that comprise the majority of that index. So I guarantee you guys are ahead of a lot of others that didn't join us on tonight's call. So guys, remember, knowledge and education is powerful. Okay. I'm a sponge. If you guys teach me something, I'm retaining that information. I'm a sponge. I respect everybody. I don't know everything. I'm not a person like that to say I know that, but I learn. I learn from you guys. I learn from the snipers, right? I always say the day you stop learning is the day you die. Doesn't matter about age. You can be 20 years old, 44 years old. You could be 84 years old. You can be 104 years old, and you could still be learning about life and everything. The more you know, the better you are as a person. So, but with educating in the financial markets, you're giving yourself so much other outlets that you can trade and have possible streams of income. So just take it one day at a time, one bar at a time, candle by candle is kind of how I live my life. I go by candle, and I look for good probable setups. I don't like trading every single candle. I used to, and I figured out that wasn't working. So then when I started to get a little bit more patience, and believe me, guys, if I can learn patience, you guys are way more patient than me. You guys probably know I'm the most impulsive person you guys have ever met. I'm very wired on espresso coffees, and I don't stop. Like, if I can exercise patience, you guys no doubt can do this. And just think about it how I think about it. The markets was said by Warren Buffett, the wealthiest human being on this planet. It's his quote, whether, he heard it from somebody or he lives by, I don't know, but it's a powerful quote. The financial markets, whether it's Forex, futures, derivatives, stock market, equities, options, anything, bonds, it's a financial platform with money flowing around the world 24 hours a day, and it just moves into pockets. It's just a transfer from someone's pocket to someone else's pocket. And it is a transfer of wealth from impatient traders or investors to patient traders or investors. When I heard that quote at a very young age, it really, really stuck with me. And then I said, that quote is not just for a reason. It's actually, that's why traders fail, is because they are not listening to that quote. Think about that. If we're patiently waiting in points of control, we're waiting with smart money, right? That's where the big buyers and sellers are waiting, not the Mickey Mouse traders, the real traders. We have to follow their lead. We're not going to beat them. I'm not trying to beat anybody in trading. I'm just trying to be a better person I can be than I was the day before and hopefully hit my daily goal. And that's it, right? I know I can't be bigger than a banker. I can't be bigger than JP Morgan. I can't outperform Wall Street. Like I'm not, I'm not at that level, and I'm not trying to be at that level. I just want to make a few dollars to afford to pay my bills and put some food in the fridge, and that's about it. So I know my lane and I stay in it, and I'm just more patient, disciplined. I've learned over the years that if a trade is not happening right now, it will happen the next day. And I just got to continue to patiently wait, because when it comes in that zone, I could be buying at the best time with potentially minimal to no drawdown and go right into profit with the big money making the big move. And when you learn that concept, that's when you're really going to take your trading, hopefully, to the next level, and we're all going to have to go through it at some time. You can trade impulse, you can trade reckless. I guarantee you it's not going to last for years to come. The market will eventually liquidate you if you continue with that style. I know it's fun. It's like driving a fast Lamborghini, high speeds, but you might crash and you might burn. So I'm like a grandma when I drive on the highway. I'm in the slow lane. I'm going 80. People are beeping at me. They're giving me the finger. I don't care. I stay in my own lane. It's risk-free, and I just cruise. Put some music on, and I'm cruising. That's me. You can look at me like an old grandma on the highway. That's my lane. I don't go in the fast lanes. I used to do that when I was younger, and I don't want to go through that again at my age. So if you want to cruise, go in the slow lane, wait for your opportunities, and the market will reward the patient traders. And if you guys trust your unk, I'm telling you guys, the markets reward good behavior. The markets will reward the patient. The market does not reward the impatient traders. And you got to live by those principles. And when you live by those principles, your trading will reflect, and you will have this conversation with me and say, Ron, my trading has completely changed for the better. And I'm going to say, what did you do? And you're going to say, I'm waiting patiently. I learned patience. I learned discipline. I learned how to trade with proper risk management. And that's it. I'm not asking you that your technical analysis got better. I'm not asking you about anything. You're just going to tell me your psychology has improved. That's what trading is. When you improve your psychology as a trader, the rest falls into place. Fix the trader, and the trading will fix itself. That's another quote to live by. I'm full of quotes, guys. I can give you guys quotes all night, but quotes are for real. Like when I heard those quotes, I put sticky notes all over my room, and I just look at those every single day when I was struggling, and I adhere to those. So you guys gotta really, if you want to take trading to the next level, yep, Tyler, life is like a box of chocolate. Exactly. And trading, you never know what you're gonna get. You never know what you're gonna get out of these candles. Lee, stop over trading and over leveraging, and you will likely be profitable. It's easy to say, but it's so difficult, Lee, to do. It sounds so easy when we're saying it. Just stop over trading, stop over leveraging. I've been saying that, Lee, for 6 years now. You know, Lee, that I lose my voice on these calls by saying that every day. But some traders are thankfully listening and changing their style of trading. Other traders, it just goes in one ear, out the other ear, and all they're looking for is the next buy or the next sell. That's it. But I can tell that those traders are not really learning the proper way of trading. They're just looking for the next trade. I was that guy too back in the day, and it got me nowhere. I'm trying to save you guys a lot of time. Believe me, I've invested probably more time at staring at charts and trading than most of you guys combined on this call. I put my time in, I put my work in, and that's why I know what works and I know what doesn't work. And I don't want you guys to go down the path when I started, because it leads to nowhere. It leads to financial ruin. It can ruin your life. You'll be miserable. It's just not a good feeling. It's not a good feeling to be. I want to see you guys where you're enjoying life. Life is good. You're making some money. You're paying your bills. Your bills are number one. Pay off all your debts. Then you can start investing in yourself and start getting passive income. And like I said, then the banks will start paying you and you don't have to do much. So that's where we want to take everyone in the new year. So it's kind of giving hope for everybody. I know some traders are still struggling and it's mid-December and we're going into the end of the year and it's holidays and things like that. But I just want to give everyone hope. You know, if you don't have family during the holidays, your uncle is here. I'm with you guys. So you guys got hope. Continue, because 2026, you guys got to be ready. I don't want anyone sleeping. I want you guys to be ready, because we're going to take things to the next level. And I got to make sure that you guys are ready, because we're going to take education skyrocketing. Okay. So I need you guys to understand price action, basic things. When the gentleman asked me, Ron, what is COMEX? Like, these are the things that you got to learn. You got to learn these things, you know, and we have the dedicated courses and all of these things to teach you all of these things, you know, because when we get into live and we're scalping on 5 minutes, you know, the market is moving fast, right? And I got to be breaking things down with you guys. I don't know if I'm going to have the time to answer questions like someone asked me today on the call, what is a pip, right? Like, these are kind of like very basic questions, guys. You know, if you're asking about that, then you shouldn't be, you know, getting into live trading. If you're asking what is a pip, what is a spread, you're basically at the entry level, and I would open up a demo account and practice, is my honest opinion, if you don't know these terms, right? It's like driving a car and you don't know what the gas pedal is, you don't know what the brake pedal is, you don't know how to signal, you don't know how to adjust your mirror. I don't recommend you should be driving a car, right? You should be learning, studying and all of these things, okay? So that's just my advice, because I see that every day and I can see everyone's level of education. And some of you guys are just beginners. You know, you're just beginners, and you got to know that you're a beginner, because it could get too difficult for you, okay? So just learn the basics and then we go from there. But if you're looking right now on gold on the 5 minutes, so opened up, took out kind of an important area here, and now we have one leg coming down. So if I was still trading tonight, I would be marking this up. You know, there's a bullish fair value gap, that wick to that wick of that big body candle. I do my own style of finding the gaps, fair value gaps, the point of controls, I call them, with the Fibonacci tool, open, close, and I figure it out myself. There it is. It just transacted right into 50%, caught a wick. So if it comes up one more time, might be a second top up there and the drop. See the location? This is exactly the same location where we took the sell today at noon, and it dropped down. Now we're retracing right back up with lower highs. It could come down, or it could come up with more volume and start to break through here. But this looks like good volume if you're scalping tonight. Like, I wish I could stay longer with you guys and scalp. Maybe what we'll do sometimes is go for the first hour quickly, go over swing trading our charts, and then we go for the last half an hour, 45 minutes, right into scalping. But swing trading is not going to be forever. It's just a couple intro courses, because it's done on your own, right? And then we can come back into our Tokyo sessions and go right into a top down and start scalping the 5 minutes and having some fun again. So I just wanted to show you this week, just to consider swing trading and think about it. Maybe it might be something that you'll enjoy. You can do both things. You can scalp and intraday trade. See, right now I can go back to scalping and still have my high alerts on gold and crude oil for the bigger moves. I could do this. Next time we can do it with other securities. This is where you guys can give me securities and I can do the analysis for you guys. I can help you guys out. If you say run Bitcoin, if you say GBP USD, you guys know I don't scalp GBP USD, but I'm more than welcome to do a thorough analysis for swing trading. Absolutely. Because it's just basically charting and we identify good potential areas. Okay. And then we'll try as a team to do everything together. Okay, guys? So I really appreciate you guys. Thank you guys, everyone that joined tonight. I know it's not a lot of you guys, but I appreciate your time. And I hope you guys can learn something from today. I hope you guys took something from today's call. Again, join the free Telegram. It's available for you guys, pinned at the top of YouTube. Subscribe to the channel. We do appreciate you. I'm telling you, your subscribe will be worth it. You will get value out of hitting that button. I promise you. It costs you nothing to hit the subscribe button. If you trust us, you're putting your trust in us, and that's our reputation. My reputation, Dave's reputation means everything. Money doesn't mean anything to us. Reputation is more. And we want to make sure that you guys are learning with a solid community. Not just myself and Dave, but the entire community, like everybody in here. Tyler, Lee, Justin, all of you guys, Sergio. Like, we have a community of some top dogs in here, and these guys can teach you more than I can teach you. If you hop in the Discord with these guys are a different level. So that's what we want to kind of make here, an open community for traders at all levels and with no egos here. And we all learn something from each other. Okay. Beiruz, last question. Ron, before you go, would you please explain what the point of control does and how you use it to make a trading decision after cut the candle in half? Okay, good question. But real quick, let me just do it right now. What's just happening? So you see this big blue candle? This is a significant candle that closed above this wick, this wick, this wick. If we just mark these previous wicks right there, see right there? Wick, 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 wick. So that's a significant candle that closed with volume above this level, not just by a little bit, by a lot, okay? So that candle took off. Beiruz, I'm speaking to you personally, so please pay attention, okay? Because you asked me this question. So you asked me then, we identify the candle, that's our job. Is this the important one to mark the point of control? Absolutely. Why? Because this candle came up and went right back down, but this one officially closed above this resistance right here, okay? So now it closed above. So when I see that, this time, 10 after 8, grab my Fibonacci tool, opening price, closing price. Where's 50%? Look, the 50% is exactly where that resistance was, right? Now, the next thing is I find my point of control, okay? Because now, let me explain it to you, Beiruz, and to everyone, pay attention, because this might be a question that you guys had, okay? So why do I do this on this bar, okay? Because look what happened here. The candle opened, there was just a small, tiny pullback, and it went bullish, 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 took out the high of this entire zone. If we go to the left, this was a red zone, right? It was red. If you were trading with me earlier, I promise you, I would have told you that this is resistance. And I promise you guys, if you guys know me, I move it into the future. Then I see that bar came in. That was a big, strong blue bar at 805, and then they rejected it back down. Then this job, how the candle opened, its job was to fill the prior wick, and it completed its job. It filled the wick, but not only that, it closed near the high. I always do a wick analysis too at the close of a candle. Is there a big wick it left behind, or did it close relatively to the high? So it closed 95% near the high, correct? So that's a very strong bullish candle, right? And there's got to be a point of control of this candle. So when I figure it out, open, close, my point of control, the candle closed strong, bullish above. So what I do with the zone is I give respect to these buyers by making the point of control to them, showing that it's bullish. So now, if there's like these traders that bought the high, FOMO, when this candle's coming up, you could have bought in here and then you're in the money. But there's, when it's coming up and then we buy the highs, sometimes we're buying at the wrong area. We're buying the high, FOMO trading. And what a lot of traders like to do, or pending orders, what I explained earlier, are situating themselves while that volume is going up and it's still going higher. Now, the depth of market is starting to fill in this block. It's getting a lot of orders. And we went over this earlier. There could be sell orders that are pending in here. Why? Why would sell orders be pending in here? Because if the sellers think that this is going to come back down in here, they want to get activated to bring the move back down, okay? But I do it by showing the respect to the candle, and that's why I make it green and red, right? But I want to show you that there's pending orders in here. They can be buy orders and buy limits. And then in this situation, the next candle opened and look, it was black, 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 and it stopped right there. Higher low, shallow pullback. Did it advance into this point of control? No. And then came back up and created another new high. Now it's trading in a bigger red zone. There's a wick there, and look at this candle. This one came all the way down, black, black, black. If you advance now, see it black, 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 and traded right in there. So it picked up all of those pending orders in that point of control. If you were sitting in here with a pending order and you got activated, how much drawdown did you incur in that bar? Nothing. Right into the money. Let's say right at 50% you got activated, it went up. Right when it got to the opening price, you're up 30 pips. As a scalper, that's all I need to survive. 20, 30 pips. A lot of times I'm banging out these candles just like this. And what I say is minimal to zero drawdown. And then you can just do your thing. But this thing advanced, look, 40 pips, right? And you could have literally taken out 80%, left the rest running. But that's how you could have got activated with no drawdown in that block, right? And if you continue to advance it into the future, it's still the block there until a black candle closes below for verification, because it could come back in here, get another wick and go back up. But right now, you see where the buyers and sellers are fighting right now. So this is kind of how you build structure in a market. This is where you build it right here. See now how it went up, wick, 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 wick. Did any blue volume close in this big red zone? Where did I get that big red zone from? Remember, we did some 4-hour analysis. That's where that's coming from. And now we got a little bit of a neckline. So now you can see 5-minute candles came up. They came, maybe come back down. Are they going to go back up? Is it going to advance out of here? Is it going to be like a double top and draw? And then look at the neckline. This block is what we're trying to break. And if it actually sellers bring it down and close it black below there, then it shows me that the sellers are in control now. They've closed it below. And then what I do is with that same point of control, I don't change the size of it, nothing. I just continue stretching it into future, but I give respect to the sellers and I just change the color to red. I'm a color, like I like color on my charts. I color coordinate everything. That's how I've been when I was a younger kid. And that's how I'm doing it at my age of 40 in here. So that's how some people just use neutral boxes and they know I can do that too. But for learning purposes, I think people learn better when they see red and green, buy and sell, buyers and sellers. So there I give respect. And now if there's a pullback, buyers buying right there, that point of interest, those bodies, I guarantee you will come up blue right into there. Then I see, will this now be all offers pending in here? And then can I get ready for a sell? And I'm looking to take out the next area of support right there. And I'm always just targeting to come down there and then lower my risk. And if we break, it could be a break and a pump back up, or it could be a break and a drop. And we went through this today. Go over today's live session, because we saw that areas of support when we had our black candles close below, when they came and retested exactly this, you'll see it in today's live where we took the trade. The wick came there and it continued to pump down. So it's the same thing, guys, over and over and over. But Beiruz, that question is for you. Beiruz, can I ask your nationality? Are you Persian? Afghani? Beiruz. I had a friend in high school. His name was Beiruz. Beautiful name. Persian? Is it Persian, Beiruz? I got you. Okay. So, you're from Iran. Okay. No problems. Okay. So hopefully that answers your question, brother. Okay. And guys, that's it. I got to wrap it up. I got a few things to do. And we get ready for FOMC tomorrow. Where am I from? I'm from London, Ontario, Canada, but I am Albanian. Are we all good, guys? Okay. So now you see a little bit of consolidation in here. So now the market is just trading in here. You guys are smart. You know that the market is not just going to continue to trade there. It's eventually, after it accumulates, it's going to either make a move back up here or down into here. Okay. And that's how I trade, guys. I am not a greedy trader. If I take a sell, I just like to fill a little bit of imbalance and get my money and get out. And that's it. When I go into move, obviously I want the biggest move, but I know as a tape-to-tape trader, and this is what keeps me disciplined. From here to there, I'm like a carpenter. I measure the move, so I know exactly if I'm taking it, 50 points, perfect. I know what lot size, contract size to use. I know how to manage my risk. I know if I go where to place my stop loss. I measure it. So then I know exactly if it starts going into drawdown. Today's trade earlier, you saw in our live, went into a little bit of drawdown. Was I panicking? No. Did I give it levels to breathe? Yes. Did I think that more sellers were going to come and make offers? Yes. And that's what you got to do too. If you don't bang out a trade with minimal to zero drawdown, then you're going to realize a little bit of drawdown. But all traders do. Professional traders do. I'm not no professional trader, but I used to work in the financial markets, and there was professional traders that make mistakes on a daily basis with clients' money, and they're shitting their pants. So I seen it live. So no one is immune to going in drawdown in the markets. You make one bad decision, you're in drawdown. But it's not a time to panic. If you use the right risk management, then follow the you guys can see I don't follow too much my profit loss report. I'm following the candles. I'm following the price action. I'm dialed in. I'm focused. I'm watching what's happening. That's the difference between me and other traders. Other traders, when they get in trade, they're just focused on their profit loss. Are they in the profit? Are they in drawdown? Are they in red? Are they this, that? I don't even focus on that shit, because when I take a trade, I've already mapped out my targets, and I know I'm just waiting for it to get there. And I've already calculated my risk and my target. So if I'm cool with it, I'm in the trade. That's how I control my emotions. That's how I remain like a robot, because a lot of traders, when they get in a trade, their emotions take over and they can't control themselves. And you got to be very professional. Even though you might be trading in your basement, you still got to be professional. You know what I mean? You got to be in charge of the markets. Okay. You got to have confidence with what you're doing. I see a lot of traders are lacking confidence, right? You have to be confident with what you're doing in anything you do in life. When you're confident, you have you know what you're doing. You know what to expect, right? We're not guessing. I can't speak for everybody, but when I'm trading, I'm not guessing in the markets. I know where it could potentially go with high probabilities. That's the difference between me and maybe someone else. But that's where I want to get you guys to that level, okay? And Dave and I will work our asses off for you guys, okay? You guys probably see, you guys say, Ron, your eyes look like you're real tired. Yes, we are, because we're doing a lot of education, helping the snipers through one-on-ones, doing back-end education. We're working on things. You know, we're doing a lot, guys, and we're doing 1 to 2 sessions, 3 sessions, sometimes live a day for you guys in our group, providing signals, everything, guys. We're working hard. So, but the more you guys work, the harder we work. If you guys start slacking, we might start slacking. So you guys are motivation for us. You guys keep us going. We keep going. Okay. And we know we're going to screw up once in a while. It's part of the game. Don't be so hard on yourself if you have a bad day in the markets. Happens to the best of us. Okay. Everyone's going to go through that, but you got to know how to handle that situation. And if you need to come on our lives, ask me, and then I'll get you back in the right mindset. I'm good at those things. Okay. And thank you. R. Sanders, Legacy, I appreciate you. Is it Shay? My man Shay? Is that you? I got to learn everybody's names. Okay. There's a lot of you guys, but I'm good with names. Yes, my man Shay. I appreciate you, brother. Thank you so much. Everyone, have a good night. Thank you guys so much. And you see, now we're getting a little bit of move. So now it's testing this zone. It's coming right through there. Now the bears are in control. So this candle is going to close in 2 minutes. So you got to watch and see, will it close below? Maybe this is the one leg up, one leg down. Might have another blue leg to come back up. Then you're looking for your second top. It might continue to advance higher. But that's basically how you got to go about trading, from block to block to block. Can I give you any trade setup? Okay, if it holds in this green zone and then you see maybe a blue bullish candle engulfing, that might give you the go ahead to take a buy and to see if we can break out for a new high. If it respects this green box, you know what I mean? And then the next candle is blue coming back up and engulfs and builds here, then you could be looking to buy that next leg to come back up. And but if it closes below here, you got to go through with what I did. You got to make that green box red. You know what I mean? And continue to follow what's going on, okay? But that's what I would be looking for if I was going to continue trade, because I want to trade with this trend right now. So I can see that it's got a strong bullish trend. Now it's pulling back into that point of control. So the next logical thing is, if it holds in here and builds, maybe the next leg to come and break for a new high, or it could be just that double top and then start coming down. But right now it looks like it's strong bearish volume, that it could close black below here. Then that would be negated that buy, because then you got to flip this zone green to red, and it could continue to come down further down. Then you might be looking for an opportunity to buy down in here, because there's strong support I can see on the 5-minute bars right in there. So that would be like my green zone holding, and then you watch and see. It would be a better buy in here, because this is where the run up started, just before futures right there. There's a futures 8 p.m. open. If it comes all the way down there, you're buying at a deeper discount, but this block might be building as well in here. And then if you see like an A+ setup, if it comes all the way back down here, breaks this low, comes back up, then boom, that buy, that's a valid, legit buy right there. I would be going in a buy right there, placing my stop maybe below that liquidity grab, and then taking it back up to there. See what I mean? But I would set up an alert in there. If I was going to scalp tonight, you know, sometimes I do this when I'm watching a football game or the basketball game. I'll place an alert right in there, right click it, right in there. I've got an alert. Maybe have an alert. Maybe if it takes out, you know, these highs, have an alert up there too. But that's what I would be looking for. You know, if you ask me. So that candle did close below black. So now you got to respect that sellers could continue to push this down a little bit more, but it could build back up. So here's your bullish candle coming back up. So you got to follow this bar. If it closes above, then that's that buy situation, I'm telling you. And then it respects this, then you get that buying leg back up, right? But if you join us on our live calls daily, I go through this stuff with you guys all the time, okay? But that would be my analysis if I was going to trade this tonight. It's moving rather nice. Like, it is making a nice move up, coming back down. It's not trading like this right now. See where it's blue, black, blue, barcoding, like this garbage. At least now it's like free flowing volume, and you can maybe start to do your pattern recognition and recognize your patterns, okay? Lee, another saying is hope is not a trading strategy. Nope. No traders have made a living off of hope and prayer. So you got to have some sort of rules in trading, guys. Okay. Jerome, you're learning from us. I appreciate you, bro. Just subscribe to the channel, join us on a daily basis, learn from us on YouTube daily. If you want to take it to the next level with the Discord, with the community, with Dave, and everything else we have to offer, you're welcome to join our team. StockSniperTrading.com. Okay, guys, everyone, have a blessed night. Thank you guys for joining me. I'm going to go hit the eggnog right now and watch a few basketball games. And I will see you guys tomorrow at noon, live FOMC. Be ready, be well rested, and join Dave too in New York and catch some pips prior to FOMC with Big Dave. Okay, guys, and have a good night. We'll see you guys tomorrow. I hope you guys learned something. We learn and earn together. Have a good night, everyone. Thanks, everyone, for joining. Have a good night. Tyler, take care, brother. Bruce, Justin, have a good day. Lee, thank you for joining, boss. Appreciate all of you guys. Tyler, that's the best. That's the best meme. I love it. That was a meme we used, and we cropped Dave's face on that. I'm gonna make a t-shirt, Tyler. I'm gonna make a t-shirt with Dave's face on that, and we're gonna distribute them to all of the snipers. Dave will love it. But guys, we'll see you. Have a good night, everyone. Thank you guys for joining. Oh man, Tyler, that meme kills me. Lee, I appreciate you. I'm glad you enjoyed it. Thank you. Really good. We try our best here. We try. If we can change one trader per day or forever, our work is done. We can always do something. We'll get it. We'll get it. We'll take care of that. Have a good night, guys. Get some rest.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.